Hi, this is David Plazas. I'm the Opinion and Engagement Director for the USA Today Network Tennessee and the Tennessean. I'm delighted to welcome you to this housing market panel to discuss the real estate outlook for 2024. We've got a great panel discussion with you today. We've got four panelists who we will introduce very briefly in just a moment. Courtney Johnston, District 26 Metro Nashville Council member. Miguel Vega, Vice President of the Nashville Mortgage Bankers Association. Nathan Weinberg, Principal Broker, MW Real Estate Company and co-founder of Retrograde Coffee. And Kevin Wilson, 2024 Greater Nashville REALTORS President. I cover a lot of growth and development issues, so this is an issue of passion for me. And I wanted to turn it over for some opening remarks by Sandy Massa, who is the co-moderator of this panel. Hi, Sandy. How are you doing today?
Thanks, David. I've been a business reporter at the Tennessean for 5 years and doing a lot of coverage of the housing market since it's such an exciting space in Nashville and everywhere. But I am now an assistant business editor, excited to be here. We have a great panel.
Well, very good. And if you would, Sandy, if you would start with the introductions with Councilmember Johnston.
Yeah, Councilmember Johnston. She was first elected in 2019 and just reelected last year for District 26. Courtney is a realtor in Nashville, real estate agent for 10 years, and she has served on the Greater Nashville REALTORS Legislative Committee for a few years now. So she's entrenched in the industry and also working to better her community. You know, on the council, she focuses on fiscal responsibility, fiscal policy in general is a passion of hers, I hear, and public safety.
Thank you. Miguel Vega is next. He's, again, the 2024 Vice President of the Nashville Mortgage Bankers Association, responsible for revenue and loan origination, Nuestro Financial, and Nova's Home Mortgage. He's a founding member of the National Association of Hispanic Real Estate Professionals, NAREP, in Louisville, Minneapolis, Knoxville, and Nashville, member of the Tennessee Housing Development Agency Housing Industry Advisory Board, and a frequent lecturer at Middle Tennessee State University on topics regarding the Hispanic market trends in the United States, mortgage banking, and organizational innovation.
I just got tired of that introduction. Thank you so much, David. Doing a lot of stuff. I need to probably cut it down, especially with this market.
No worries.
Glad to be here, David.
No, thank you for being here. And Sandy, over to you for Nathan's introduction.
Nathan Weinberg. He is the owner of Retrograde, co-founder of Retrograde Coffee, which has amazing baked goods as well as drinks. And he's also a real estate agent. So he does a lot of work in East Nashville, doing infill residential, I believe. And so he's really involved in different sectors, doing a lot of stuff. And is deeply entrenched in the community with all of that work that he does. Nathan?
Thank you. And last but not least, we've got Kevin Wilson. He's a Kentucky native and has lived in Nashville for more than 25 years. He's a U.S. Navy veteran and graduate of Belmont University. Over the past 15 plus years, he's enjoyed a successful referral-based business as a realtor serving Middle Tennessee. He now serves as president of the Greater Nashville REALTORS, as well as a director to TN Realtors and the National Association of Realtors. He's a broker with Pilkerton Realtors and currently resides in East Nashville. And let's set the stage a little bit. We're going to ask our panelists to make some opening introductions, but we know for the last 3 years, the Urban Land Institute has called Nashville a supernova city. The area is growing tremendously. There's also a lot of pressures with regard to the costs of that growth. This week, there was news about the Federal Reserve deciding to keep interest rates where they are, which has been a big part of the discussion as we've been talking about access to the home owner market. But let's ask each of our panelists, starting with Councilmember Johnston, can you give us your outlook for the real estate market? What's happening today and what do you see in the months to come?
So a huge challenge, obviously, are the interest rates. I was lucky. I just got someone under contract today. We locked in 6.25%, which I was actually elated with. So yes, happy about that. But that is something that I think is going to be a challenge for several months, if not years, for people, because what used to cost one thing is now more when you're getting less, really. So that is a huge challenge. And then we also still have quite a few people moving here to the Middle Tennessee area every day. So we have a large amount of demand. and the type of people that are coming here. We have an AMI that is very, very high. And so when you talk about affordable housing, you talk about the supply that we have, you talk about the demand that we have. From a homeowner perspective, it's fantastic, right? Because our property values are continuing to go up, and that market is strong. From a buyer perspective, and especially a first-time home buyer perspective, it's really, really challenging. And so I think it's, of course, everyone is dealing with the same thing. And so my outlook on it is, it makes me nervous for my first-time home buyers. It makes me happy for people that have some equity in their homes, that have access to capital. So when we have a conversation around affordable housing, you're talking about folks that are typically first-time home buyers and people that don't necessarily have the access to capital that other people do. And so what are the solutions to that? And you've got different tranches of folks, right? You've got 40% of AMI, 60% of AMI, 70% of AMI, and every single one of those groups has different challenges. And so, which will lead to needing multiple solutions, multi-pronged solutions. And it's, so that's a really long answer to say it makes me a little nervous. It makes me a little bit excited. But we've got definitely some opportunities for improvement, and some challenges that lie ahead.
Thank you very much, Council Member. Mr. Vega, tell us a little bit about your outlook for this year. What are you seeing, and what are the challenges and opportunities?
Thank you so much, David. And beyond going to my magical 8-ball and tell you where the rates are going, because right now, honestly, the bet for us is to be in an environment of rates between 6.5 to 5.5. But everybody that tells you that is somebody that is just making a very bold, it will say an observation that comes with the Fed being not that hawkish, as we call it. The rates are staying still. And today's sign was that they are probably done with pushing rates up. But to the council members' point, I agree 100% that it's not only about it's the rates, but also is the wages, and it's also the affordability in terms of how many houses we have. We when this rate hike started early last year, we started seeing that the market started cooling down artificially, but really we're in Middle Tennessee. We just have, I think this month, David and co-panelists, I just heard that there are 2 or 3 Texas, California, and Illinois companies moving headquarters here, small, mid, and large size. So we keep attracting that higher income Tennessean now. Well, the future Tennesseans are people that are going to be making 6 figures no matter what. And of course, the market is reacting to that. We have expensive houses, about probably the highest we have seen, even though the rates are up. And of course, the sellers that want to cash out on that equity now are locked down, because they also don't want to go to a place where they're going to have to pay 3 or 4 points higher interest rate that they were paying last year. And I'm making all this very complex topic because what I'm telling you is this year is going to be a very weird one. This year is going to be interesting because all the elements, it's a multi-dimensional aspect of housing. I applaud all the efforts that have been done through the different organizations, realtors, home builders. In our end, there are so many regulations that are also affecting the impact. They're having a big impact on affordability. When you talk about the fees that we have to pay to the government-sponsored agencies, that's affecting. When you start talking about regulatory issues into the home building side, makes it harder for them or it makes it more expensive to them to buy. We, of course, know all the issues with the real estate world right now. It's all convoluted, and at the same time, we need to give houses to that first-time home buyer. What I've seen is a big effort for educating them, telling them that you don't need to have 20%, that even though a rate is 7%, you can have a home that will be around the same price of a rent. And also that the rates will go down. I mean, the rates probably, we won't see those 2.5%, 2%, but the rates will go down eventually. We're in a cycle. We know this is not going to last for more than a year, hopefully. And things are going to get more stable. So the point here is, let's keep pushing for home ownership. Things are very complex, but the market and the need is still there.
Thank you very much. Let's turn it to Nathan to give us your outlook for the real estate market.
Thank you, and thanks for putting this panel together. I think that I have a little bit of a blended perspective here. I think that both the council member and Mr. Vega have really sort of hit points right on the head. We have a confluence of opportunities here in Nashville. Affordable housing is chief amongst those, but changes in Nashville can't really happen until we have broader infrastructure changes across the region. And so that requires the municipal government to play nice with the state government. That hasn't always happened. It requires regional and local associations to get together and push for real reforms as it relates to infrastructure development in the city. And I'm being really specific when I say that transit is maybe the number one thing that will keep Nashville from growing the way that it can moving forward. None of the affordable housing being built in the city will matter if people can't get to and from it. And so our focus needs to be in the next year, 3 years, 5 years, really truly on developing a transit infrastructure that works for everybody. And additionally, I think it's really exciting to see Councilmember Johnston and her colleagues thinking long and hard about policy that can make building in this city happen at a more rapid pace. In addition to that, and I'll end, I'll say that I think that this coming year, as rates creep down, and they will just do that, creep down, we will see people that have been waiting to sell their existing homes finally do so. They cannot wait forever. And that will help. That will help do two things. It will supply much needed existing home inventory to the market. Existing home inventory tends to have a much more pliable price point, which is good. And it will also have the added benefit of moving people and cycling people through the city. And that's what we need to see and have happen. And so I'm an eternal optimist. You can ask any of the agents at my brokerage, they'll tell you that. But I really do believe that this is a pivotal year for Nashville. And I think that we can do some really exciting things this year.
Thank you very much, Mr. Nathan Weinberg. And now we want to turn last but not least to Kevin Wilson to give your outlook. Many people here may be familiar with your column, and you've been writing a lot about this particular issue, but tell us a little bit about your thoughts about the upcoming year.
Sure. Well, I agree with what everybody has said. There's no doubt that it's a complex market right now. But I would also offer that 2023 closing the door on 2023 has put the worst behind us. And I say that because in 2023, the median home sale price in our 9-county reporting area remained stable. I think there was a 0.6% decrease in the median home sale price. And so that to me speaks volumes about the demand, even at an 8% interest rate in our city. So if you look at that and combine that, yes, we were down 16% in the total number of sales that happened in our 9-county area. And that could be seen as significant, but in the fourth quarter, we were only down 4%. So we already started to see that shift in the fourth quarter as we come into 2024. Another factor that's going to come into play in 2024, which has already started actually, is just the Fed not raising rates any higher. They've stayed stable for the last few meetings. Probably will stay stable in right where they are in March. But I think that at that point, you'll start to see them come down. And with that information alone, we have seen the lending environment, and Miguel will be able to speak to this a little bit more, but seen the lending environment open up a little bit, and rates have come down, and buyers, there's a lot more buyer confidence. There's a lot more enthusiasm in the market right now. I can tell you that in January, there have been more showings on my listings than I've had in the last 3 months in the fourth quarter of 2024. So I think 2024 has a lot of excitement ahead of it. And I think we're headed in the right direction. Lots of conversation about affordable housing. I know we'll get into that. But I think that, before we start to solve the problems of the future, which are already now, we need to talk about the affordable areas that we still have in Davidson County. And we dug deep into the numbers, and ending in 2023, there were 7 zip codes where the median home sale price was under 400,000. There were 3 where it was under 350,000. And so we need to be telling the story that we're in a market now where you can get into a home with 3%, 3.5% down. And so buyers, when we weren't in that market in 2021, so buyers need to be educated there. Also, right now, we're probably in the most balanced market that Middle Tennessee has seen in years. And so sellers are making some concessions like closing costs on behalf of buyers. So buyers have more opportunity now. Yes, the rate is higher, but the rate is temporary. You can refinance that. You can never get back the money that you can save today in the transaction.
Thank you very much. Let me turn it over to my colleague, Sandy Massa, who has a couple of questions.
Hi. So I was just thinking about the new normal, which is what everybody's talking about. And that's what we're going to hopefully settle into in 24 and 25. And I was looking at the Greater Nashville REALTORS data that they have, that they keep updated on their site. And then I just saw that in December 2023, our closings we're down about 41% from what they were in December 2019. And our prices were up about 45% for a median home price, which was $470,000. And I was really glad you mentioned that there's a lot of cheaper things than that, but the median went up to $170,000, which is unattainable for the median wage in Nashville, obviously, in the region, probably in the MSA. So you do need 6 figures to buy a home in the Nashville area median. But of course, there are deals, and I think getting those great creative deals is a way to win in this market. But as we settle into the new market, what are ways to win for buyers, sellers, and people who work in the industry as you're hopefully getting back to stable? Anyone who wants to weigh in, I guess.
Well, sure. I will jump in on that. I think that the way is just what I talked about, education and information. The more you can educate yourself on the market and the resources that are available to you, the better. So if you think that potentially 2024 is your year to buy a home, your best next step is to connect with your local realtor and to connect with your local mortgage banker or lender and find out what options are available to you. Yes, there are opportunities under $350,000 in a median home sale price in Davidson County. If you look at condos and townhomes, they are even less expensive. A median home sale price is usually for a condo about $100,000 less in Davidson County than it is for a median single family home. And the last thing I'll say about that is there are a lot of organizations as well as lenders and institutions that are providing first-time home buyers and entry-level buyers assistance in that. And one that I'll really focus on is THDA. So THDA offers first-time home buyers either $6,000 down or 6% down toward their 3.5% down payment and other costs, and the qualifiers for that, you can make up to, if you're a single person, you can make up to like $120,000 a year. So it's not for buyers who are just at like $50,000 or $60,000. You can make a good amount of money and still qualify for this assistance to get into a home in our community.
What do you see kind of on the ground? Oh, Courtney, I'm sorry.
Okay. Sorry, I was just going to say, just to piggyback on the education part of it. So certainly, finding a mortgage professional that can help you learn what's out there as a resource to you, but also learning what you can do to put yourself in a better position. And a lot of that is learning about your credit score and how to make that better and what things to do and things not to do. For example, I have a first-time home buyer that is 70 years old, which I love the fact that she's 70 years old and it's a first-time home buyer. She's super excited. She paid off some credit cards, understanding that she wanted obviously to increase her credit score, but she closed the accounts. So when she closed those accounts, that negatively impacted her credit score, even though she thought she was doing the right thing. And so understanding how your credit score works and educating yourself on what you can do, not only about what are resources out there for you, these loan programs and incentives and things like that, but what can you do personally to put yourself in a better position to get those really good interest rates. Just wanted to throw that out.
I was thinking, Nathan, how are you feeling? How are buyers feeling, or how do you think they're feeling in 2023 going into 2024? I know you said people are excited with the mortgage interest rates stabilizing, but people still tough to sell your home in this environment. Buy something that
it's a psychological question, right?
Yeah.
People have to embrace the fact that 2021, 2020 is no more. And that's okay. You know, I reflect often on my very first home purchase, which was not as many years ago as I'll admit, but more than you might think. And it, in that moment, I had a 6.5% interest rate and I was jumping up and down. It was amazing. To that end, the house was a lot less expensive, right? And so I think that it's a re-education, it's a readjustment of everybody's perspective in the city and in the 9-county area and beyond around what can and should I buy, and what can or when I can and when I should sell. And when those two things meet, you'll start to see people come out of their caves and see the sunshine and maybe feel better about what happens. What is really key here is that we start to encourage people to reframe what housing looks like. And so I think that people became really accustomed to saying, I want X and only X. And that doesn't work when you have limited supply. And so Kevin mentioned it a moment ago, but rethinking, okay, it's my first time buying a home. Maybe a home for me as a first-time home buyer is in fact a townhouse or a condominium. Those things are fantastic entry-level options into the housing world. They plant your foot firmly in the home ownership category. They come with lots of benefits, like an association that can help to protect your home ownership experience and the value of your home. And it's just a reframe. And the minute people stop thinking about homes as permanent, that's the moment that we can start seeing the logjam clear a little bit, because permanency is a real problem when it comes to home ownership. We need people to be using home ownership as an opportunity to build wealth. You can't do that unless you level up. And level up doesn't necessarily mean bigger, right? It just means moving, changing, leveraging your ownership experience to benefit yourself moving forward. And frankly, that benefits everyone down the line as well. And so I think that reframing what housing looks like and then thinking again long and hard about what the purpose of home ownership really is really important here. And I really do believe this is an important year. I think people have really started to wake up to the idea that things aren't as they once were, and a normal doesn't really exist. We operate in a constantly changing environment, and we have to be flexible if we intend to get on the train, because the train doesn't stop. And so we just have to get on when it slows down enough for us to find an open door.
And mentally, what we're able to normalize, like absolutely. I think people are starting to feel like, okay, low sixes, and where, 2 years ago that people would say, what in the world are you talking about? I would never buy a house at 6.5%, right? And now people are going, all right. So to Nathan's point of the mentality of things and where people's heads are, I think you'll see more buyer confidence when the shock sort of normalizes.
On the product side as well, council member and Nathan, Kevin, I see that the investors are getting more creative, from the agencies to the banks to now we call it non-QM, the non-qualified mortgage providers. We are getting more products that are targeting people with challenging credits, people that don't have the same way of reporting their income, their assets. And I can see that as an opportunity for a lot of first-time home buyers or want to be first-time home buyers. The industry is coming around and becoming more flexible. We are still heavily regulated and still want to have that ability to repay. It's very important. We're not looking for another 2008, 2009, but what we are seeing is more creativity, more flexibility. As an example, we're about to roll 1% FHA no MI product for educators, firefighters, first responders. We call it the giving back loan, basically, because it's the people that is serving our communities that need to live in our communities. It's not fair that they have to travel 1 hour to be at their home, at their workplaces, and we need them quickly, right? We're talking about these first responder, EMTs, nurses. At the same time, this can set up an example for rolling this out for our production, people in services, people in the restaurant industry, in the hotel industry. Many things are coming around. I see that silver lining now. I think this past year helped us to basically gauge that we're no longer in Kansas. We're no longer in that 2% that sailed, and that might not come until 20 years later. But right now we have a lot of opportunities to make home ownership happen with the resources that we currently have.
You know, I was thinking about the lending industry when you mentioned credit scores, and we know the banks are, hurting with the commercial real estate challenge with office buildings. How are lenders feeling? You said they're willing to be more creative, but are they starting to tighten up their standards or?
I would say the bank-owned mortgage companies are getting tighter, which is allowing a lot of the other independent mortgage bankers to get creative. So we have a lot of investors. I think Wall Street is getting more risk happy in terms of some products that they would avoid 5 years ago. The same thing that we were talking about, people wouldn't think to buy a home at 5% interest rate. There were some investors out there in the market. The aggregators, Sandy, the ones that buy our loans, are becoming more complacent with this new generation Americans, people with documents that we know they are making money, but they cannot prove that income as easy as any other American. So I see that evolution going on in the past, probably, I would say the past 6 months. You can see that increasingly happening. So in terms of the general industry, I could say in average, we want more business. We want to get the business one way or the other. And we know we have to become more flexible to do it. When you go to a bank, a big bank that is regulated, that they need to put something, what they are doing is they are creating certain products for their own employees that they can access this zero down, no MI, but they are very regulated to high minority areas, or they still want to comply with some of the Community Reinvestment Act directions. In the case of the general industry, we're about the business. We want to put people in homes so everybody makes money here. And at the end, you're benefiting that. You're creating that multi-generational wealth that we talked so much about, especially in the minority first-time homebuyer segments.
And I think it's important to know that different mortgage lenders have different products. And so while you want to have your favorite guy or gal and be loyal to those folks, that's not necessarily the best way to go about it. And so just like you shop insurance rates and you shop, different things, you need to shop those different mortgage rates and understand what products they have, because different properties qualify for different loan programs as well. And so again, to the point of educating yourself and knowing as much as you can about what you can do, but what's available for different things. And so when you say, oh, I'm talking to Miguel and Miguel has this product and this is great, but I've got someone else over here. And so whatever home I land on, so that you know where the best way to go, and you've got those options so that you feel like you've gotten the best deal, right?
I would also add, you mentioned the commercial lending environment, Sandy, and I think one of the things that we have learned in the last really couple of months specifically is there are a number of existing commercially oriented loan products that have really fundamentally changed for the better. The most specific one that I can think of right off the bat is the SBA loans. They have now loan products that are called SBA buy-in loans. And so people are now able to leverage SBA buy-in loans to buy into existing businesses. And so what that is combating is a real sort of silent killer in the commercial world for the last 20 years, which is a lack of available mezzanine debt. So mezzanine debt is something that holds borrowers over between, it's a bridge loan is what we would call it. It's mezzanine debt. And so now you've sanctioned mezzanine debt, but you've done it in a way that the SBA is involved. So lenders have an additional layer of protection. There's additional scrutiny. So the people that are borrowing in that product are now able to really be scrutinized in a way that makes them an asset to a bank, not a liability. The other thing that I'll say is, it's important that people understand how lending works in the commercial world. And Miguel, I'm stepping all over you, so I'm sorry. But banks are operating not dissimilarly to how individuals would operate if they were investing money. And so they're looking to have diversification in the buckets of lending that they have. And so if a bank is very heavily invested in new construction residential, yes, they're not necessarily going to be super eager to provide lending, even to existing well-qualified borrowers. But other banks who didn't get in on that section of the market might have a need to dump into that bucket. So to Councilmember Johnston's point, shopping around is key for both residential and commercial borrowers right now. There are lots and lots of opportunities. That did not exist 3 years ago. Banks were all, try to negotiate with me on rate. I can't do it. Nobody can. Well, now they can't just negotiate on rate. They can do that. They can negotiate on product. And that's so exciting. We haven't seen that, I don't know, Kevin, like 10, 15 years? It's been a long time. It's really exciting.
The question I have is about choices for especially transplants who come here. I myself am a transplant. I've been here for 10 years. And while I don't have personally children, I know that's a big aspect that people make a decision on when it comes to where they're going to live, whether it's going to be in Davidson County or outside of the county. What are some of the suggestions you might have? I know you're part of realtors or mortgage brokers, but development is such an important part of this as well. As where do you build? How do you market these particular areas so that people will come and live? So I'm very much an optimist myself, and perhaps a little bit Pollyannish when it comes to, we should be more about, yes, in my backyard until, it's in our backyard type of thing. I see those changes of mentality that are always there. Could you give us a sense in terms of what do we need to do to create that infrastructure that Nathan Weinberg talked about earlier today, to create an environment where people want to live here, want to be proud to live here, and also promote the different aspects of the county here? And maybe we could start with the council member Johnston, since you're closest to this aspect, I think, and then anyone else who would like to comment on that.
So probably the most important thing that people ask, whether they have children or not, to be honest, because it absolutely plays into resale value, is how good are the schools in this district? And so, and it's also super important to your neighborhood to have the good schools in your neighborhood. So you making sure that we have the best public education system that we can possibly have is critically important to everything. It's not just about educating our kids singularly and narrowly. It has implications across the entire economy. If you don't have a good school system, people are not going to want to come here. They are not going to want to bring their businesses here because their employees don't want to come along with them because they are subjected to, the poor schools. And so that is really, really important. Focusing in on infrastructure, to Nathan's point earlier, transit, and making sure that we have growth that is around those inappropriate areas where transit is now. Let's take advantage of where it is now and plan that properly. But I mean, we just went through a really bad snowstorm where TVA is saying, hey, if everybody could dial back on their heaters to not draw so much power, that would be great so that we could avoid some rolling blackouts. That's an infrastructure issue. And so we're talking about adding supply and we've got an aging water and sewer infrastructure. those are things that have been historically maybe not maintained the way that they should on a regular basis, or maintained and replaced, or enlarged, right, for increased capacity. Our roads, having appropriate staff and equipment to handle potholes and things like that. So it's very, very complicated, and there's so much that goes into it. But I would say, looking at making sure that we have the best education and that our infrastructure is growing along with our community and being maintained properly. And we've got managed, responsible growth that is matching the growth of the infrastructure, is incredibly important. I mean, people are starting to think about that. And that, again, I know when I've got clients, that is the question: how are the schools? And I'll have a situation where there's one neighborhood over here and one in the same zip code, but different elementary schools. And they'll go, well, I'm going to go with this one because this is a better school within the same school system, but it's a different elementary school that has a better reputation. So we've got to really focus in on that and do the best we can for our teachers and kids, for, again, a multitude of reasons.
As much as I agree with that, I think the cheat sheet, you touch a very important point. That's what we need to be focusing. Like the infrastructure that we are living in is getting overwhelmed very quickly. I think that funding is necessary, and when you talk about funding, money has to come from somewhere, right? And that's the elephant in the room. We live in a very conservative state in terms of taxing people, and when we enjoy that, and that's one of the attractiveness of Tennessee, right? We enjoy that we are not as taxed as any other places in the country, but at the same time, the game is coming to who's paying for the infrastructure. If we are getting 50 new families moving into the state every day, well, there might be something that needs to be done to put up with that. There is also the need for federal funds. And again, I don't want to go political here, but there is the need for federal funding into our education. Being a very Republican state, sometimes our state legislature don't want to tap into those resources because they want to be seen that they are, in some case, subject to the regulations or their oversight. So there are many things that are also involved in politics. This is a year that, whether we want it or not, this is all about politics. We are in election year, David, and I'm probably taking a tangent here, but I just want to say that when it comes to funding, it comes to politics. We need to see that. Strategically, I think as much as we are attracting big corporations, we're attracting small, medium, and large businesses, we need to start attracting that talent in education. And that talent of education will come when they see that our life standards are better, that wherever they live in the West Coast or in the East Coast or in the North are better here in Tennessee. So that's another campaign that we need to start focusing. Let's bring that talent for our kids. Let's bring that talent for, we need better doctors. We need more nurses. They will love the weather here if they're living in Pennsylvania right now. I mean, nothing wrong with that, but I mean, we have it better here. So there are things like that probably there are some fine tunes that we need to do in terms of attraction of talent and attraction of resources of people that will enrich our community, not only bringing us jobs and bringing us money, but also bringing us the services that we need.
Yeah, one of the things you'd mentioned was the election. The only thing I'll say about that is that there are some critical issues on housing that are in Congress right now, including a tax credit bill with regard to affordable housing. There's going to be the Tennessee Housing Development Agency housing conference in just a few weeks. I believe it's the 29th of February and March 1st. Senator Blackburn is scheduled to speak. The head of the Harvard study on housing is scheduled to speak. What are some of the things that our legislators, both statewide and federally, can do to assist in making homeownership more accessible to more Americans?
I'll happily take that. So I think there's a lot of things, and we'll focus on Tennessee because that's where we live. But the federal government needs to be supportive of states and cities in all of the things that my fellow panelists have said in the last 5 minutes here. And I think that, namely, if I was going to give them really specific things that they need to do, They need to consistently and free of political mumbo jumbo reappropriate funds for the flood insurance program across the country. It's critical to home buyers and homeowners. And then additionally, at a federal level, we need to protect and potentially even expand the mortgage interest tax deduction. It's something that is critically important for home ownership across the country. Without it, I think that you'd see a significant decline in home ownership rates and potentially even increase in foreclosures. I want to go backwards for just a second, though, because I think that Councilmember Johnston really sort of said something that I think is important here, which is education is key. Many, many decades ago, somebody said education is a silver bullet, and they weren't wrong. Education is a silver bullet. And I think if we're going to improve schools in the state of Tennessee and in Nashville specifically, we have to start by celebrating the great schools that we already have. Because Nashville is home to 2 of the top 100 schools, public schools in the country. And you don't say it out loud. And we have to start doing that. Additionally, our elementary school infrastructure in the state or in this city is some of the best that I've seen since I grew up in Minnesota. And Minnesota has consistently one of the best public education systems there is. Where we struggle is when we get into the more advanced schooling years. So when we get into middle and high schools. And that is not the fault of the educators that are working in those facilities. They are working night and day. We have to support them in every way we possibly can. And Dr. Battle she works from 6 in the morning until 10 at night. And we have to give her the kinds of school board members that can support her in her decision-making to improve public schools across this city and county. And until we do that, it's going to remain a struggling issue for people. And when they move here, all we're going to do is support privatization of public schools, and that doesn't help anybody. And so I just wanted to say that out loud. And I know this is a housing panel, but I think that's a really important topic.
Thank you. Would anybody else like to add anything else, or shall we move to the next question? Sandy?
Yeah. So I was just, this is a huge change of, it's very interesting. This is a little bit of a transition, but still at Nathan, I was just thinking about working in East Nashville or anyone working in East Nashville, the East Bank coming and what do you expect that to happen to your real estate values? And obviously, obviously won't be great for affordability, but I know the city's done some stuff. We just opened the new river, forget the name of it. Sorry. But yeah.
I think that it's going to do massive things. We have been waiting since I have lived here, and I'm sorry, I'm like grandstanding, and I promise I'll turn my mic off in a second. But since I have lived here, they have been talking about the East Bank project, and nobody has advanced it. Not a single leadership group in the city has advanced it in the way that it should, until, to their credit, the council and Mayor Cooper finally got the stadium deal passed. And whether you like the stadium deal or not, that was the log jam that needed to move forward to move the East Bank project forward. What it will do for housing, it's going to be incredible, because what it has taken is an incredibly large piece of geography in the riverfront and in the urban core of the city and transitioned it to mixed use. And mixed use is the key to building elevated infrastructure for affordable housing, for affordable commercial, for affordable and appropriate light industrial uses along the river. And so what we're going to start seeing is transit is going to become oriented around that rather than a tunnel downtown, which I think probably wasn't like the best part of the previous transit plan. And affordability is a part of this. It's very important that we say that. And the council member probably can talk more about that, but affordability was key to this. It was a piece of the agreement that many of these residential units in that urban core section along the East Bank would be relegated to affordable housing units. That's both rental and for purchase. And it will remain that way for a long time. That is so important, because whether transit makes it to that spot or not, by putting it in the location that it's in, people can walk and bike to work from that spot. And that's really important. And now I'll turn my microphone off.
And of course, the city's going to has a really impressive and expansive plan to build a lot of new affordable housing there. So at some point.
And I would also say I live in East Nashville, and I'm really excited about this expansion and what it will do for our city, basically having a second downtown structure on the other side of the river. And I think that's really exciting for all residents, not just East Nashville residents. But I will go back to what you asked previously about what the government can do, what they should be doing to help. And since we're talking so much about affordable housing, I think it's important to just to point out that that the government or our city council or our city cannot fix affordable housing alone. This has to be a public-private sector collaboration to be able to put in place the kinds of housing that we desperately need right now. And I'd also say to that we don't just have an affordability crisis, we have a housing crisis. So once we can get the units built that we need in the city to ease up the demand, it's going to ease up the pricing. So more of our community can afford that. I love that you started out one of the questions with, what's going to keep people coming here? What's going to get people excited about Nashville? We're already there. People are already excited about coming to Nashville, and there's a lot of reasons for that. I think that I was in a meeting with the chamber earlier this week, and their projection for what we will see from 2023 was that there was still 85 people a day moving to the metro area. And so that's a large number of people still relocating here. So it isn't a matter of what will we do if they come. They're coming. They are still continuing to come in droves. So we do have to fix this infrastructure, all the issues that the Councilmember Johnston and Nathan and everyone has talked about here, because people are going to continue to come. And I look at commercial sales, and we hear a lot about office buildings being empty. But when you look at commercial announcement like St. Regis Hotel is coming to Nashville, that's a big deal. When you look at the Exxon on Broadway, that little piece of ground that the Exxon sits on sold for $31 million. There are people very, very excited about this city, and I would offer today that we are just getting started.
That's totally true. And to piggyback on that, Kevin and Nathan, we believe that with regulation, a regulatory environment that is more, I'd say, more attractive for real estate development, less restrictive, we can just create. We're already starting a virtuous cycle where we are building more, we're attracting more employees, we are creating more houses, and we are creating more office spaces, more service spaces that is attracting even more people. So we are creating this spiral upward that is also, of course, a challenge in infrastructure-wise, but I think this will provide the money that our coffers need to start paying for those big works of infrastructure, like those bridges that need to be done, those new spaces for affordable housing. The amount of businesses that are being attracted to Nashville are probably the main source of that revenue, that money that we need. So again, we need to brace up ourselves to continue being attractive, not being that Grinch that says Nashville is full, stop coming here, because I've seen that one more often lately. And again, I'm a transplant myself from California. I'm the classic one. I came almost 9 years ago, and I can tell why. I'm a witness of the growth and the attractiveness of this city. We just need to keep it rolling, being smart about creating that environment where we are not overly killing ourselves for one or two misconceptions.
We have about 10 minutes left of our program. I wanted to get back to buyer education for just a quick moment. We've seen tremendous increases in rents here in Nashville. That was considered by the Harvard study a major crisis back in 2017. When we were doing some analysis at the Tennessean, then we saw an increase of rents by 57% over the decade, while wages rose just by 7%. That doesn't include the new moves of people since then, the six-figure salaries that were mentioned earlier. But as people wanted to just transition and think about it, should they prepare mentally, financially, especially with what it seems to be these sudden changes in how much they're going to pay for housing at any given time?
the relationship with money, especially for a first-time home buyer, is a keystone here. We need to start, and again, I go back to education, right? And to Nathan and Courtney's points. We are educating a newer generation of home buyers that are used not to own things. They don't want to be attached to big debt. They don't want to be seen to have a car if they can have Turo, right? They can have Airbnbs instead of having a vacation home. There are many things that our newer generation is adverse in terms of getting into a big financial obligation. On the other hand, buying a home remains the best and the most secure way to build wealth in America. And that's something that we need to, I think that as real estate agents, as loan originators, all our industry just rally behind that flag. You need to have a home, a small home if you cannot afford a big one. If you cannot afford a townhome, go for a condo, go for an apartment, stop renting. And how you gonna do that? Start a good savings account, start a good budgeting planning. It goes to probably a Dave Ramsey 101. Start with that, manage your money, how you manage your debt, how you build certain savings, very basic, very fundamental issues with money. I think that's my point on that, to start moving towards home ownership for that newer generation.
Thank you. And we do have a question for this panel very quickly in the time we have left. I don't know if anyone is able to answer this, perhaps the council member. Should churches be able to lease their land to housing developers to build affordable housing?
Should churches be able to lease their property for affordable housing? Is that what you said?
Yes.
So I have this actually in my district right now, where the church has a large lot that is largely unused. It's a lot of green space, and their churches are struggling across the country. So they're looking for multi-pronged approaches to not only creating another revenue stream, but also expanding their mission. And so I think that question is not something that you can answer blanket. I think that's very much just like any zoning question that we would get, right? I think you have to look at where that parcel is, what community that parcel is in, what the community feels like they want. Churches have sort of an expanded way of for land use for their property. They have a little bit more leeway, and I don't know, I can't remember if it's a state or a federal property rights thing for churches. But so could that be interpreted that they can? Right now, that's actually going through Metro Legal to figure out, is that something that they can do? But I think the question really is, what does the community think? And you move forward in that fashion, because what's appropriate in my district with my constituents and neighborhood may not be appropriate in East Nashville or in Sylvan Park or whatever, so I think it's a case by case basis. And if it works for the community, then great. And if it doesn't, then we need to probably look for something else.
I think that, the thing that is interesting here is that churches and religious institutions enjoy a privileged tax status. And if they are going to receive income from that privilege, then I think that there is a public benefit that is partially lost. And I think that I'm a property rights person. I think that people should be able to use their property for the things that they generally like. But I think that should not come at the expense of taxpayers. And so, if communities are going to be making decisions around affordable housing, yes, vacant land should be on the radar of every developer and every politician in the city and every municipal agency. But we have to think about the underlying components of this. And if somebody has a privileged tax status, that privilege needs to change or needs to be amended to specific pieces of that parcel so that it's more appropriate for that use.
Thank you very much. We're at final 5 minutes of our panel. With that, I'd like to turn over to closing statements. Why don't we go the other direction, start with Kevin Wilson, and then go around to finish with Councilmember Johnston. So provide us some wisdom or insight. What should people be left at if a couple of things that you want to leave them with before we conclude today?
Sure. Well, I appreciate you having me, David. It's been a great conversation. It's been nice to hear from everybody on the panel. I would just leave the public, the consumer, potential buyers with this thought. Yes, right now interest rates are a little bit higher than we have historically seen. They're quite a bit higher than we saw in 21, 22. But also demand right now is lower. And I talked about it before. There are concessions out there from sellers who are willing to negotiate to get you a better deal than you have been able to get in this city and surrounding areas in years. And so I would encourage people who are thinking about buying a home to pick up that phone. The first step is always the hardest step, no matter what you're doing. And so pick up that phone, call your realtor, call your mortgage banker, and find out what the possibilities are for you. Because I do believe that by the middle of the year, the Fed will start to drop the rates. And when we hit, and I do believe that we have the potential to be in the high fives by the end of the year. And when that happens, there is a tipping point and a floodgate that is going to open, and all of that pent up demand and all of those 85 people that are moving here per day are going to start getting into the market, and the chance that you have now to negotiate your best deal will once again be gone.
Thank you very much. Nathan Weinberg.
Well, thanks for having me, and thank you, panelists. It's always fun to be with you. I think that I would say that there's a few things that I'm looking forward to in the next year. I am also looking forward to a more favorable interest rate environment, though I don't think that that's necessarily the main thing that we need to have happen right now. I'm really looking forward to Councilmember Johnston and her colleagues coming up with real logical transit referendum that is something that people can vote for and be excited about and can move things forward. I'm also really excited for Mayor O'Connell's administration to start addressing some of the other broader infrastructure things that really do change fabrics of communities and make them better places to live. Food deserts remain a real problem in the city of Nashville, and I think that that's something that we need to work on if we intend to see communities advance in some meaningful way. And then the last thing that I'll say is that there's 117 cities across the United States that have eliminated parking minimums in their inner core. And that's something that I know has been discussed in Nashville. But if we want to see real mixed use growth in the urban core of Nashville, parking is something that is going to be key to making sure that happens. And I don't mean adding parking spaces. I mean the exact opposite. So I think that on this, I have made angry everyone who goes to a church and everyone who wants to find a parking space in downtown. But I think that it's really important if we want to see the urban core thrive. And so thank you again for having me. I'm really excited.
Thank you. Miguel Vega.
Thank you, David. Thank you, Sandy, and of course, great panelists here. Always a pleasure to share the stage. My final comments would be the best time to buy a home. It was probably 5 years ago. They will tell you. The second best time is when you can get pre-qualified. Get pre-qualified. Check your credit. Learn about all the products. As council members said, you need to shop around. You need to see who has who. There are so many new and attractive products for first-time home buyers. You cannot imagine the amount of efforts that are done by investors just to push those products out to the market. But again, we are used to that classic conventional FHA, our classics. There are so many more and more creative products for people that want to buy a home even on the non-qualified mortgage scene. Without being a subprime, there are so many options for them to afford a home in our region. The last part that I would like to leave you is, when you talk about affordability, it's about wages, it's about, of course, mortgage rates, and it's about home prices. We are, as Kevin said, the home prices are getting to a point that we can negotiate. We can get that support. Wages, getting better. We live in Middle Tennessee. There is always a demand for jobs. And of course, the interest rates are going to, when those three elements that I'm telling you get better, affordability happens. And I think that's something that we need to consider, not only as a one-dimensional issue, but a multi-dimensional issue with our home builder friends, with our legislative body, and of course, with our bankers and real estate agents.
Thank you very much. Councilmember Johnston.
Thank you. And thank you for having me. It really is an honor to be here with all of you and speaking with everyone. I'm going to answer in two ways, with my council member hat and then my realtor hat, which is sort of a weird dichotomy sometimes. So from a council member's perspective, this is not a one-shot, a one-pronged thing that's going to solve affordable housing, or from a rental perspective, or from a zoning perspective, or from anything. We have a lot of opportunity, I will say, in Nashville to grow in the right way, to plan land use type things in the right way, and put our city on the best track forward to as Mayor O'Connell says, to work better, to all those things. And we have a dedicated group of people and some incredible employees in Nashville that are working very hard to do that. And I'm hoping that we have a great relationship with our state legislature and our federal government, because it's going to take all three prongs of government as well. Nobody's going to solve it alone. So that's a really quick way of summing up a really complicated deal. From a realtor perspective, I would say for our buyers, call your realtor and educate yourself. Get yourself in the best place possible that you can, to be able to qualify for the best loan, understand the best things for you, right? The different programs that folks have. And your realtor really is your best resource, because we work with mortgage professionals all the time. We know the market. And so finding that realtor that can connect you, that can guide you to the people, because there's so many resources out there. People don't even know what they don't know about who's out there and who wants to help with all of the different aspects of home buying, home selling, all of those things. And so just pick up the phone. I forgot now who said the hardest thing to do sometimes is just to pick up the phone. I think it was Kevin. He's nodding his head. Is just to pick up the phone and start the conversation, because it is the best way to build wealth, is to have your biggest asset that is growing in value all the time, and you catapult. It's a step, right? To Nathan's point, it's a stepping stone. And so people are nervous about it. I get it. But it's one of the best things. I bought my home when I was 25 years old, which was a little taboo. But man, it has just been the best thing that I could have ever done for my financial health. And I encourage everyone to do everything they possibly can and educate themselves so that they can be on the best path forward.
Thank you very much to our panelists, to the Greater Nashville REALTORS, to my colleague, Cindy Massa, Assistant Business Editor and Enterprise Reporter. A shout out to Blake Stewart, who put this panel together in collaboration with the Tennessean. Keep up with business and housing trends on Tennessean.com. And thank you very much. Everyone have a great night.
Thank you.
Thank you.